Hello traders, welcome to another trading interview with one of our FTMO traders, and today we're having Griffin from Wayne/Bartlett in Illinois, USA. Welcome Griffin. So guys, for those of you that actually might think that Griffin's face is a little too familiar, you're right, because Griffin is actually here for the second time. We have interviewed you for the first time in January of 2021, so that's gonna be 2 years in a couple of months. So and you've been trading with us ever since. But for those of you that have not seen the previous interview, could you make a little introduction? Just tell us a bit more about yourself. So what do you do? And yeah.
Sure. Yeah, no. So again, my name is Griffin Murphy. I've been trading now for about 6 to 7 years. Um, Strictly professional forex trader. I love commodities. I love cryptocurrencies. Um, I also am a huge sports bettor as well. So those are my two basically bread and butters, as well as basically what I love to do on a daily basis. Most of people that know me are either they know me for either A, being in the office trading, or B, watching sports and betting on sports. Those are my two main key roles in life right now. At this point in my life, I'm 26 years old. But yeah, that's basically where I stand right now.
All right, so let's get back to the roots for a moment. So you started trading 7 years ago.
hmm
So like I assume, like everyone else, you started with some demo account. Then you started some of your own small life accounts.
So, not necessarily. So originally when I started trading, I was trading with my own capital, and basically I was going on BitMEX. I may have mentioned this in my previous interview. I would go on BitMEX having absolutely no idea how to trade whatsoever, basically just figuring out the steps, the system. Is there a way to trade, whatever the case may be? My buddy had mentioned it to me, and I hopped on BitMEX. I threw a couple $100 into an account with absolutely trading Bitcoin with
Okay.
absolutely no idea what I was doing whatsoever. It was literally drag the margin tool and decide how much you want to risk on this trade and hope that price goes up and down. And finally, I had lost thousands and thousands of dollars doing it to the point where I was like, all right, enough is enough. If there's a way to do this, I have to figure out the way to do this. So I took a free course and basically learned, okay, hey, there's actually candlesticks involved. There's certain ways you can read and understanding the markets and trading the markets. So I had took that upon myself. Once I figured out that there was a way to actually do this, read price action, read fundamental analysis, which has been a key element in my trading as of this past 6 months to a year. That's where I feel the market has taken a huge, gigantic up spiral, and I will get into that later on in the interview. But yeah, basically that's how I basically started trading. I had to lose a lot of money first, and then once I got to that point, I started trading with my own capital. Once I realized, hey, this is actually something that you can actually do and make a profit doing. Little did I know 6 years ago that it was as hard as it is. Not to say that it is impossible, because obviously there are so many different ways that you can make money in this market. I mean, so many different ways. Everybody has their own scope. Everybody has their own strategies, whether it's algorithms, rather it's intuition, technical analysis, fundamentals. Everybody has their own way to trade. So yeah, basically I took it upon myself. I had went deep and took a bunch of different courses, basically figuring it out. And once I felt the confidence to start kind of trading, once I found FTMO. I found you guys and another service that I don't know if they exist. It's, I believe, Traders for Traders. And basically, so I started doing demo accounts and trying to figure out the psychology behind these numbers, because when you're looking at your phone and originally you're looking at it's like $100 to $200 in drawdown, and then all of a sudden it goes to 2,000 to 4,000 as you're upscaling, getting better and better. So obviously I started with demo accounts. I recommend to every single trader, including I actually am launching a brand, and in that I recommend every single trader to start with an FTMO demo account. If you're going to trade with your own money, trade with 10K on the demo account. If you plan on trading anything else with you guys funded, I absolutely recommend staying with 100K or 200K. Keep the psychological levels or the numbers leveled to you, keep it easier so your brain can adjust and realize and understand how these numbers work, because it's a gigantic impact while you're trading the market and profit taking.
Mm-hmm. All right. Now you've mentioned that fundamentals were key for you in the last 6 months or 1 year. So,
hmm
how exactly did fundamentals, change your approach to trading?
So yeah, it actually, it's crazy because being a trader now for almost 7 years. I started back in 2017, 20 late 2016. Um, I was strictly a price action trader, technical analysis trader. And anybody who would ask me how I traded the charts, it would always be I trade candlesticks, I trade price action. And the reality of that is, I had learned about a year ago the market is directly moved off of fundamental fluctuations from the banks. The market is not moved by technical analysis nor price action.
Mm-hmm.
Price action is your correction. Price action is after the move has taken place. Again, I don't want to give out so much information. I am launching my own course, but again, at the same time, uh, fundamentals are all the fluctuation of the market. That is what is going to move the market. That is your scope. That is your driver. Once you get your fundamental breakout, that is when you use price action and candlesticks to dictate your retracements, your Fibonacci retracements, your patterns, everything like that. But you can't do any of that, I learned, until the move has occurred based on the fundamental approach. So I had spent the last year of my life reading about understanding central banks, taking free economic courses. I took one from Stanford, I took one from Yale, and they're all free courses. They're all
Mm-hmm.
stuff that you can literally go online, udemy.com, and literally just take these courses and you learn how all of this works, and how right now during the what's going on in the economy with interest rates, with inflation, with unemployment rates, it is so crucial right now. And people are I remember, so even myself a year ago, getting completely wiped out of trades when the technical analysis and the price action was lined up perfect, where like you had your entire setup, everything was just crisscross beautiful, everything you're looking for, and somehow I'm still losing 5 trades in a row. So I had to take a step back, most definitely, and start learning and reading about that. So I listen to a lot of Bloomberg for my subconscious mind. I don't necessarily watch it, but I do listen to it. But basically, I read tons of different articles. I figure out who the speakers are. I figure out if they're hawkish or dovish. Everything, again, that I will be teaching in my brand. Um, I don't want to continue talking about my brand, but everything I will be teaching is in that aspect. But these are things that, if you call yourself a professional trader, these are things that you have to know. If somebody I talk to and they tell me straight up, I say, yeah, I trade for a living. I ask them how they trade, and they say, well, I trade price action, technical. They're not a real professional trader. You have to understand what's going on in the economy. You have to understand GDP. You have to understand income. You have to understand inflation. You have to understand all of these things. And the only way by understanding them, which unfortunately it's not my most favorite thing in the world to do, because I definitely love looking at charts much more than I like learning about the econ side, the economic side of things. But as being a trader now for 7 years, finally I got pushed to that threshold about 5.5 years into, like, hey, listen, this is now what you do for a living. There's no looking back, there's no going back. So you're going to have to dive in and take upon all of this. So I have taken fundamentals as an extreme approach. I was an original 100% technical price action trader. Now I'm 50-50. I would say even 60-40 on fundamentals.
Mm-hmm. Yeah, I actually agree on that because uh, from my point of view, if you really want to do trading, consistently and for a long period of time, you actually gotta understand the full game, right? I mean, of course,
Absolutely.
there are many traders who manage to be profitable using only price action or technical analysis, but still, I think if you're missing out on fundamentals, if you're not considering them into your strategy, uh, you're still, you're still not a really complete trader, and it's not
No,
really possible to stick just to reading the candles and reading the charts without considering the fundamentals at all. I don't think that's really sustainable for a long time.
it, it's like basically getting in the car and having a destination with no GPS. You don't necessarily know where you're going. You're kind of just driving. You know, you need to understand the scope, the spectrum of basically what is going on within the market as far as the fundamentals are your driver.
Hmm.
Those are the ones that are telling you where the market's going to go. Your price action is basically just telling you, okay, my driver is indicating now I can punch in the address on my GPS, if that makes sense.
Hmm. Yeah,
But
yeah.
that's basically what I've taken from fundamentals.
Hmm. So, what are some of your sources to get the fundamental
So,
news? So, Bloomberg, you mentioned.
so I use a lot of Bloomberg. I use Forex Factory. I use the actual consensus. I use a lot of Twitter. I
Uh-huh.
follow main speakers on Twitter, and I want to. And basically, it's lined up in a setting which I'm giving a lot of information out. It's based off like in a setting of hawkish or dovish, and basically, you just want to see how these guys are speaking because everybody kind of has their own stance. They're sectored in hawks and doves, and basically, you want to see, so following them all on Twitter and when they're supposed to talk, you kind of want to see, are the Hawks remaining hawkish or are they now playing reverse psychology? Are they talking dovish when really they're hawks? And if they are, that's telling you there's uncertainty in an aspect to where A, as a professional trader, you either stay out and back out, or B, you look deeper and figure out what's really going on and look into more speakers and see how they're relating their messages. But that is the main concept, honestly. Forex Factory, Bloomberg, Google, Twitter, anything like that. I have another really big one that I use. I'm going blank right now. But anyways, yeah, there you can find sources all over the internet when it comes to finding fundamental analysis. But the main key role is basically on Sundays when you know your weekly outlook is coming out. You want to see what's coming out for the news of that week, who's going to be speaking. Go on Twitter and see if they're tweeting, see if they're talking, and then see when they're speaking. If you can watch their events, watch them. If you can't, go on Google and see what everybody's saying about them the minute that they finish, and that's how you can basically determine your factor of a fundamental bias.
Mm-hmm. Okay. Well, one question that popped into my mind. Do you also trade pairs outside of the US dollar? Because obviously, when we're talking about fundamentals, and we're talking about the Fed, right? The Fed members and so
Sure.
on. But are you able to consider fundamentals into trading also? No, let's say GBP JPY.
Yes, absolutely. I trade all currency pairs. Obviously, JPY is always going to be that safe haven kind of currency. Um, but yes, no, I can trade any currency. It's always based off of what the fundamentals are saying, who's speaking, and then obviously covering the JPY basket if I'm going to trade JPY, and also the DXY. Basically, if you can follow the DXY and understand what the DXY is trying to tell you, and then you go and you do your fundamentals, it's going to give you a much better outlook, a much better spectrum of the whole market in itself. The DXY is obviously our number one. It's a G. It's going to cover everything, your G10s, but that is basically all necessarily. That's the most important to follow. But yes, I can trade any currency pair. I know CAD is huge with oil.
Mm-hmm.
Obviously, Aussie dollar is gonna or Aussie is gonna be huge with iron and ore. So there's a bunch of different ways that you need, or a bunch of different, I guess, indicators you would call them in a sense that you need to understand when trading each currency pair.
Yeah.
But when it comes to the G10, the USD pairs, um, easiest thing for me to do is follow the DXY and then just follow the Fed.
Mm-hmm. Okay. Now, the last time we interviewed you, I believe you made a profit of about $13,000. So that was
Mm,
in January 2021.
yep.
Now I believe in the past 2 months you've made about $32,000. So I'd like to know what is there anything that has changed since the first interview, or did you change your approach to trading?
Yeah. Oh, yeah. So obviously, yes, a lot has changed in time. At that point in time in my life, I had started, I was 23, 24 years old, and I had just started making, but right before that period of time in my life, I was dead broke. I had absolutely no money. Um, so I started making money in the markets. And then I had mentioned previously in my last interview how I was going to eventually turn that sports betting aspect as well into my own type of company, my own type of source of income, which in fact I did in that case. So I've gotten extremely serious with my sports betting as well. So opposed to trading and sports betting, I actually intertwined and took my strategy from trading and intertwined it into a sports betting strategy. So yes, so going back to the question, what has changed for me? And it's risk. Risk is by far the most important thing that everybody must understand. In my previous interview, I had mentioned I was risking 2.5%, I want to say, per trade. Right now, I am strictly risking only 1% per trade. Max is 1.5% on a scale and position. And the biggest thing with this is I had realized, so for a little bit, I had went back, I had stopped trading and I started trading with my own finances.
Mm-hmm.
And the greed is the mighty devil. I will tell you that right now. And trading with my own finances, I had learned because I was winning so many trades in a row. I mean, it started up chaotic where I was running up on my own accounts a lot of money very, very, very quickly. And at that point in time, this was probably 8, 9 months ago. I'm sitting out. So I'm 25 at the time. Everybody's going to work, everybody's waking up for their 9 to 5 jobs, and basically I'm sitting out back getting ready for games to go on, and I'm sitting in wait and just pounding trades over and over and over again. It got so crazy to the point where I was attacking $30,000 days in the trading market with $3,000 startup accounts, like where I would literally deposit $3,000 and go for 30K a day. And it worked a couple times. I had executed my plan, but as time went on, over and over again, I was starting to lose, and then
Okay.
starting to chase money. And
Uh-huh.
once you start chasing money, it becomes very, very bad for you. So during that point in time, I went through a crazy, crazy how do I say, basically I hit a wall in a sense. It was okay. Obviously, I know how to make tons of money in the market. I've got my sports betting thing. I need to come up with next plans because now I'm bored as all hell. I'm sitting here all day. Everyone's at work. I'm laying back watching sports, laying by the pool, doing nothing, whatever. I need to figure out another venture. So obviously, I talked about real estate in my previous interview with you guys, as well as now I'm doing I'm buying into franchises, and I'm opening up actually my own health and wellness center for IV therapy and treatment. But basically what changed me in trading was realizing that I am liquid when it
Mm-hmm.
comes to, I'm somebody who can get on a computer and within a month time span I can run up anywhere from 10K to 50K. But the thing is because I'm liquid in that aspect, it's very easy to lose that money. So you have to be so disciplined in this career, because when you come up on those finances, you have to have buckets and dishing them out in. And I'm not talking about dishing it out into the stock market. I'm not talking about dishing them out into the crypto market. Obviously, do that. Always allocate funds for the stock market. Always allocate funds for different markets. But you have to have legitimate business. You have to have, when you can make this type of money, you have to know where to put it. Otherwise, you're going to end up losing it all. Greed always comes back no matter what anybody says. There's no perfect human. If you want to create your own robot, obviously people run algorithms and everything like that. You can run your robot, but eventually your robot's going to get wiped out. Every algorithm in the markets, they always never last. They're 3 year type of thing, 5 year types of things. But basically what changed me was my risk. And once I had lost X amount of money and started getting really furious with myself and the markets, I really had to make a gigantic change and figure out, okay, now this is what I have figured out about myself. I know I can make this much money per month. I have to figure out now how I can be better in a sense of risk, but not only risk, growing, because I now know this is what I am going to do for the rest of my life. At the time, I always told myself, I'm going to be a trader. I'm going to be a trader professional. This is what I'm going to do for the rest of my life. There was never any doubt. But as we all, as traders, know, you go through those cycles of absolute hell to where you can't find a winning trade. You could take 20 trades in a row and you go through absolute hell. And I have gone through it so many different times to the point where you're like, what do I do? Like, I can't even take this anymore. So I had realized that it was finally time. Okay, now I've got to get really organized with this. So this is kind of outside of the trading scope aspect, but at the same time, this is really what changed me in the aspect was knowing exactly where I was going to put that money when I got it. As a kid, 24 and 25 years old, running up $500,000, six, 700 grand, and looking around and all of your friends are going to 9 to 5s, making 40 to 70K a year, you kind of feel, it gives you this type of ego. It gives you this type of not understanding of the circle and the realities of life, because your whole life you're in this system to where you're supposed to go to school, you're supposed to go to college, you're supposed to, after college, get your degree and then start a real 9 to 5 career. And for me, that was never the case. I never finished college. I barely finished high school. I did finish high school, but barely. So for me, it was definitely, and it's still to this day I deal with it. My older brother, he's an attorney, and I see him go to work on a daily basis, and then it gives me that backlash of anxiety, and it's like, just no, this is what you do, this is your lifestyle, this is what you do. But yes, going back again, how it changed me was knowing where I was going to put those finances when I came up on them.
Mm-hmm.
Figuring out, A, I am liquid. B, I know how to make money in the markets. C, now when I make that money in the markets, where is it going to be distributed? And that's obviously, first, you get your money out of the markets. Then plan two is you build into a business, you buy into a business. And then plan three is obviously real estate. Right now, real estate's kind of a mess as far as inflation. Nobody knows when these prints are going to start coming down. Personally, I think they're just going to continue to go up. Although I have been following a little bit about tightening. Um, but just like in any market, you can look in the bear market of a crypto market and you could find a coin that surged 200%, 300% that day. So it's the same thing in real estate. That is my approach. That is exactly what I'm doing. That is exactly what I'm allocating for. And I have just bought into my first franchise right now. So that is my next step right now, as I just turned 26 a week ago, 2 weeks ago. So that's where I'm currently standing on that standpoint.
Okay. I guess you could also summarize it by saying that you need to be financially or organized, right? I mean, a lot of traders
Yes.
are out there, and if you're gonna make a lot of money, it doesn't even matter if it's by trading, but or with any other activity. But if you make a lot of money, you gotta know how to work with it and how to use it in order for you to make even more money, right? I mean, obviously,
Exactly.
being paid and then using the money to spend it on cars and clothes. I mean, that's nice, but if that's your only goal, then probably it's not very sustainable.
Listen, exactly what I did, and that was the issue. Was
Yeah.
I had came up on all of that cash, and you have to understand, because it happens so many times to where you'll come up on a quick 50, 60, 70 grand, and immediately you look at your bank account after a month and a half, 2 months, and you're like, what happened? Where did I spend? What did I spend all my money on? So it happens to that point to where you literally have to be business educated. And as a trader, the biggest thing, and actually this is a lot of it, is the biggest thing as a trader is when you're trying to learn how to do this, there's kind of two steps to this thing. And 1 through 3 years into trading, basically you are reading all self-help books. You're basically figuring out your personality, who you are as a person, as a trader. Are you risky? Do you want to be a swing trader? Everything like that, that approach. The downside to that effect is you're not necessarily learning outside of that, the aka typical business world, to where you can go and get, see, I don't have a degree, so if I was to back out of it back then, I wouldn't have a degree. So I would be working not a minimum wage job, but I wouldn't be working a job that pays very well. So it comes to a point to where you have to be business educated. And when you're in that first phase of year 1 through 3, you're kind of figuring out who you are in a sense, but you're not working on the outside world as far as what would happen if this was to fail, where would I go, what would I do with this money, how do I start a business right now if I don't have any money, type of situations. And then once you reach that threshold of, okay, now year 1 through 3 is done, I've made enough money, I've lost it, made it back, lost it, then you hit that year 4. And once you realize that's step 2 of, okay, now I know, okay, this is what I do for a living. I know I make money in this industry. Now I need to be business educated. Now I need to understand where am I putting this money and how am I going to build myself as a human. We all know trading is an extremely risky business. You're going to make money, but you can lose it just as fast. So when you make that money again, you have to understand exactly where to distribute it.
Hmm.
Otherwise, you're going to lose it again. So that's a great thing. But that's why, again, I recommend everybody to FTMO because of the risk to reward to it. You can get a 200K funded account and you're literally paying $1,200 USD. The risk to reward factor, you said it was, I think, 32K, I think, in the past 2 months. I don't know what it was.
Yeah, something like that.
I am straight risk free right now, up 32 grand, just because I bought in $1,200. You can live a life doing that, not sustainably getting rich off of doing that. That is where all of the businesses come in. That's where all the real estate comes in. That's in where all the backlash comes in. But sustaining a life, especially if you're younger, if you're right now 18 through 23 years old and you're watching this interview, there's so many things that you need to take out of this, and it's understanding that, hey, if you stick with this and you sustain your growth and you don't quit on this, I promise you you'll make money in the market. I guarantee you will. You will make money if you don't quit. But it's having that step to go to the next step. You always have to know business that you have that next step, because if you don't, you're going to make that money as a child and you're going to spend it on bottle service, you're going to spend it on Gucci shoes, you're going to spend it on that nice Jaguar. It doesn't matter. And then eventually you're going to be in a cluster again to like, oh my God, I spent my money, I screwed up, whatever the case may be. Everybody has their own circumstances, but yeah, again, that is something that as a younger trader, I wish that I totally knew, was the fact that, hey, this isn't, you're not invincible. Because I got to a point where I felt I was invincible. I was making so much money in my sleep, to the point I'd wake up in the morning, oh, I'm up another 5 grand today, I'm up another 8 grand today, whatever the case may be. And I didn't have that business education side to myself yet, to where it was like, listen, no, this is not where you need to put it. This is where it needs to sustain, allocate until you're ready for your next venture. And that's the biggest thing. So going back to, if I was 23 years old, 22 years old, those are my biggest recommendations that I recommend to all of you watching, is always have your plan B and C. Always focus. Plan A is the trading. That's where you're going to get all your liquidity. That's where you're going to get all your money, everything like that. But have that plan B and C to what you really love and you're passionate about, so you can put that money inside of those spectrums and build your life that way.
All right, perfect. All right, here we are back with a gold open right now. So, Griffin, you said that you're gonna break down a few trades. So,
Sure.
what do we see here?
So currently, I'd love to actually explain this in the most efficient way possible, obviously. So the DXY is currently what I follow as a symbol always, and I won't be able to explain the correlation between the two because these trades did happen in the past. But I'll give you the technical analysis breakdown for this trade, these specific trades, and how I read this. Um, so what I basically did was I was reading the dollar index, figuring out if it was bearish or bullish. And what I had found, obviously, what it was bullish in the sequence. Now, looking at this from a top-down analysis spectrum using technical analysis, currently we are driving in a downtrend. So I saw, as soon as we pulled this dip, that we were either going to continue going up to the upside, or we were going to continue our downtrend, and this was going to be our high. So once I saw that price had scaled and drove down into here, this was our high point right here, and we drove right into here, I had seen that we had made an A B sequence. So the market runs, it's actually crazy how simplistic the market really is when you're able to actually look at it in a backward spectrum and see how everything is working. The market works very, very simple. And honestly, it plays the same games and tricks over and over again. Again, fundamentals are what's going to carry you away and take the technical analysis out of the aspect. But it's very, very simple when it comes to just reading technicals and not having to worry about fundamentals. But again, you have to worry about fundamentals. They're key in your trading. They have taken over the market so significantly because of Russia, because of interest rates, because of inflation, everything like that. So basically what I was doing here was I was looking at my A, B, C, and then my D down here. So once I was able to recognize that we had an A, B, C, D in formation, I wasn't looking to take any trades because coming up to here at our pivot point, it would have been too risky for me.
Mm-hmm.
We broke a level of support. Price came back, retested it. So this would have immediately, if I was looking to take shorts here, it would have been immediately stopped out, obviously. But I knew this was a level that needed to be broken. So I simply knew once we drove up into here that this was a trap on top of a Fibonacci retracement sequence. So going into a longer term spectrum, we're on the 1 hour time frame. So what I did was we created our 1 tap, our 2 tap. So this allowed me to apply a trend line. Once my trend line was applied, drag it all the way down. What I had been looking for here was our A, B, C, and then D Fibonacci fulfillment. So I used the -27 and the -618 as my extension. So once we got down here and I realized, okay, we just are currently in the coordinates of an ABC. We have reached our C. Now we are respecting this trend line right here. We have 1 tap, we have 2 taps, and now we have 3 taps. Remember, this was that trap that I was anticipating that I had told you. This was to stop out all sellers. They needed to get a quick retracement. We got our 3rd tap here. So what I was waiting for in this sequence was I had set a buy stop right under, or I'm sorry, a sell stop right under our 0, 0 level.
Mm-hmm.
And for the reason being, I wanted to see price break through this support, signaling to me that this was indeed a trap. Because everybody knows we have 3 strikes as execution. We have 1 tap, we have 2 tap, we have 3. But I wanted to make sure, look, this is a 1, 2, 3 bullish engulf. That's another indicator for a bullish move. So I knew I can't take this trade in a long sequence yet because I need to make sure that it's not a trap. My anticipation is bearish. We're moving in a downtrend. So what I did was waited for price to break this level of support. Once we touched into this level of support, as you can see, we rejected that Fibonacci with a nice wick, came inside of here. So what I did was I knew, hey, we need to fulfill D here. So scrolling in to this 15-minute time frame, and sorry, my chart's not extremely clean right now. Let me go into the 15-minute time frame. So what I did here was we've already gotten our 1 tap up there, our 2 taps up here, our 3 taps. We broke structure. Price came up, anticipated a retest. And once it anticipated that retest and failed, I had known immediately once price dropped, all right, we are going to continue our bearish segment to the downside. So we know that we have this level. Let me delete this right here. We know we have, oh, my bad. We knew right here coming down A, B, we have C right here. Now, if I'm just going to clean this up for you guys really quickly, what I'm doing right now is I'm applying a Fibonacci because this is just a simple sequence.
Mm-hmm.
Right here, what we got was simple. It was textbook. We already knew we were bearish. We already knew that the USD was bullish. So gold, obviously, in that sequence is going to drop. It's going to depreciate. So, and again, I wish I can get into the fundamental aspect of what I was looking at during that price or during that point in time, but I can't obviously because price has switched itself, obviously, where that happened. That was the 31st. It's now, yeah, whatever. It's the 7th of September.
Yeah.
Yeah. Yeah. So what I simply looked for was A, B. Once I got my C, look at this. On the 15-minute time frame, our 78.6 retracement, which is the healthiest retracement. Obviously, your 61.8 is going to be the healthiest retracement, But when you get the 78.6, you have more variables in play.
Mm-hmm.
So I've actually mastered the Fibonacci in an aspect of how the variables and numbers work. And basically, the bigger the retracement, the better the fulfillment of the move you're going to get. So I knew that we were going to anticipate this minus 61.8 extension level. So I simply got my A, my B, my C, and this is where I was looking for entries. So I had set a buy stop right above this 61.8, and I was anticipating a wick lash. Obviously, I almost did, in fact, get stopped out, but I obviously maintained the position. As soon as I got these wicks, I got that bearish engulf, wiping out this previous wick, then a couple trap candles to scare everybody off, and then boom, obviously price dump. So this is in the smaller time frames. So what I could have really did to really, if I wanted to murder this trade, although this was already a 1 to 8 trade, I believe. Yeah, 1 to 8 too. A, B, C in a smaller time frame, then scrolling back out of into a higher time frame. We know this. A, B, C, we have to fulfill our D, which is down here if I apply the Fibonacci again.
By the way, do you always apply the Fibonacci, or do you use it with all of your trades?
I use it with all of my trades. I do, because the Fibonacci is going to always give you that retracement. Like I said, the fundamentals are always going to be the driving move. The fundamentals are always going to give you that move. But when it comes to price action with the Fibonacci is always going to be your retracements, your pullbacks, your natural fluency within the market. That's how the market, that's where price action comes into play. Back 2-3 years ago, it was strictly price action. You didn't even need to follow fundamentals. You could read price action and take all of your trades based on simple, what is price action doing? What is technical analysis, top-down analysis saying? Now it's not so much the case anymore because there's so much going on in the actual fundamental aspect of the market. So you have to adapt with it. But going back to this, A, B, C, D, there's our fulfillment. I knew as soon as this level of support was broken and turned to resistance, I knew we had a downtrend. We were trending downwards, and I actually could have went in here and taken many more trades. If you look at this and you go to a 5-minute time frame, I'm going to show you right now. The market moves this way over and over and over again. Let me delete this just to clean this off for you. A, B, beautiful, 2 taps. C, now really quick, apply Fibonacci. A, B, C, look at this, perfect rejections right off of our minus 61.8 extension. So again, I can't give out too many of my strategies. This is one of my strategies that I use that I have found significant, so much effectiveness in the market when using. There are obviously tons of other strategies that I have incorporated into my course. But again, this is the mainframe of the market. Once you understand the trend of the market and you understand the ABCD sequence, you could, and the Fibonacci, you could basically trade this market however you want. But going back, you also need to take another look into the fundamental aspect as well. Everybody gets very scared when it comes to fundamentals. They think that it's very challenging. And the truth be told with you, I don't have a college degree at all. And I could tell you more about what's going on in the market than any of my friends with master degrees. It's very, very, very simple. You literally just need to and as soon as you start reading about it, you'll realize that it's all derived around inflation, interest rates, GDP, CPI, PMI, and I don't think I'm forgetting any. It's literally that simple. And as soon as you understand what each one of those means, you'll literally understand how to read the entire market in itself. So again, I can trade any pair. That's just a quick little gold breakdown. Sorry, I don't like that it's so sloppy for you guys right now. but I just wanted to give you a quick little strategy, quick little breakdown of how I read the markets and basically how I take my trades.
Mm-hmm.
I take my trades off of all time frames. It depends if I'm looking for more of a swing or if I'm looking for more of a night/scalp, because I do in fact trade London through New York session. So London starts here at 2 a.m. So I am trading here at 2 a.m. So if I'm looking to trade London, like just get a quick session trade in, I will take my entries off the 15-minute. But my navigator is always going to be the 4-hour. I always like to read. And also another thing that for traders out there to know is the 4-hour is going to give you your best navigation. It's basically going to give you the best sense of direction when it comes to price action, respecting supply and demand zones, respecting wicks, double tops, double bottoms, patterns, everything like that. And then again, lastly, I'll go to the daily. Basically, my last tip that I want to give out to everybody, this is kind of just a simple freebie. What you want to do when you're trading the markets at all times is obviously you want to start from top-down analysis. But when you're day trading, always follow that daily time frame. The daily closes here at 4 o'clock. You want to see where the wicks have been thrown, because where the wicks have been thrown, they either A, need to get fulfilled, like in this case. So we have this, we threw the wick came down here. Let me find you a good example. So we have wicks right here. Then price comes down and it fulfills these wicks right inside of here. You want to look for wick fulfillment. And once you get that wick fulfillment, that's where you're anticipating your next drive, because obviously down here is a demand zone. So once that demand was picked up, this is where all the liquidity was. We picked up our demand and then boom, we offspring to the upside. So this is how you can find your shorts and longs. You can literally base them off of where was the first wick thrown on the daily. Was it thrown up or down? Because if it was thrown up, well, then I would anticipate that it needs to come down if we are in a downtrend. If we're in an uptrend and the first wick was thrown down, then we would know, okay, we are going to go up. So you just anticipate based off of that. That's very simple textbook price action that a lot of people don't give out or talk out. But it's something so simplistic and something that I just wanted to share with everybody.
Mm-hmm. Yeah, that's some valuable information right there. Um, what I wanted to add on the fundamentals is that
Sure.
from my personal point of view, that's exactly what I love about trading, right? I mean, it might seem a bit too complicated at first, to see and to understand what really all those numbers mean and how to read the interest rates and what it's gonna do with the markets and so on. But once you actually
Right.
get into it, you find out that it's not too complicated and that it like perfectly
At
works,
all.
and that it makes perfect sense.
Mm-hmm.
So
It's
that's
simple. It's really simple. Like it really is. If you can put the time in and read for an hour a day for, give it a month to 2 months, you will understand everything you need to know about unemployment. About, so like I lift every day. I work out every day. I don't listen to music. I listen to Audible books when I work out, and then
Mhm.
obviously I read at night times when I'm trading and I'm in a trade during London session. Um, you can literally pick up on this skill immediately. It's really simplistic stuff. It's not rocket science, and they make it sound so hard to understand, and it scares a lot of people to the point to where they don't even want to dive into it, and that is costing them time and time and time and profits and profits and profits. It's, don't be scared of it. Hop on Udemy, go find a free course, and my course along as well. I actually am dropping a fundamental course as well, because you can't find fundamental courses anywhere. Nobody knows where to learn this stuff. It's very simplistic. Go on udemy.com, look up fundamentals, order a couple books on understanding central banking systems, order a couple books on understanding the Federal Reserve, and you'll start to really pick up on their language, fiscal policy. You'll start learning all of these different things that you've heard before in the markets that at one point in time you thought was so intimidating and so hard, when reality it's just common sense. It's very easy.
Yeah. By the way, mentioning the trading sessions, do you have a particular favorite trading session, or like do you trade only like New York session, or you don't really care that much?
Well, see, the issue is I wish Asian session, which opens at 6 o'clock here, was the best trading session, because that would be my favorite.
Uh,
Unfortunately, that's where the majority of my losses come in. There's not enough liquidity in the market. There's no volume. So I like to trade London session. My best results come in during New York session. London session is more for me of a thing of being awake when everybody else is asleep. That is my time. I go to my office. That is where I grind out. That is where I read all of my books. That is where I study my cryptocurrencies with Bitcoin, what's going on with Bitcoin dominance and the charts regarding that. And then obviously reading the Forex market, reading who's speaking, what news is coming out, everything like that. I like to prepare myself and really, because then I go to the gym around 4 to 5 a.m. And those are my hours of basically me time, where I'm basically just figuring out what's going on in the market. Are there setups available for me to take trades right now because I am awake? But at the same time, that's development mode. 2 a.m. through 5, 6 a.m. is where I'm self development. And when I can sustain and stay all the way up till 1 p.m., 2 p.m., 3 p.m., and make it through New York session, that is obviously my favorite time to trade. But I have found that it's harder for me to wake up early, waking up, say 2 a.m., than just staying awake all night. I prefer just staying up all night and continue, like not going to sleep and just pulling benders, opposed to me setting an alarm clock at 2 a.m., 1:30, waking up, doing push-ups, trying to wake up, trying to, my mind doesn't work that way. If I'm up all day and then I'm rolling into the markets, it's way easier because my mind's activated. But yeah, again, London session is like midnight through all of London session till about 10 a.m. I'm sorry, until about 6, 7 a.m. is usually where it's self-development, where I'm figuring out my business ventures. I'm reading the markets. I'm reading Twitter, all of the news, everything like that. New York is by far my favorite, though, when it comes to trading, because if you go look at my metrics, that's where all the majority of my profits come in during New York. And there's also various times in the market of when you're going to get your most liquidity. And I'm not going to tell you those times. You could figure them out on your own, or again, they're also in my course. But yes, there are also times in the market where you are going to find specific pairs that like to pump in a specific way
Mm-hmm.
at specific times.
Mm-hmm. Okay.
And New York specifically, I have my own favorite strategy with my own favorite pair that I like to trade that
Uh,
has that type of pump.
how long did it take to you to sort of incorporate this sort of schedule? Because I imagine that you must have fight, the sleep schedule.
Sure. It took a very long time at first. It so I fought with this for 3 years, I would say, to where it
Okay.
was like, all right, you need to be awake at 4 a.m. You need to be, you set your alarm, and then I would not wake up in time. And then I'd beat myself up all day about it because I'd be like, dude, you were supposed to be awake. You missed opportunities. You missed trades, this and that. Till I got to the point where I was like, finally, um, I got to the point where it was like, finally, enough is enough. I am just going to stay through the night and literally just do my own thing. And literally, when I got to that point to where it was like I'm staying up all night and drinking, I do interstellar blends, they're plant based blends for energy. Setting up and incorporating a schedule like that for me, that didn't take long at all. Once I was able to do it one time and realized it worked, that was the consistent schedule of every single day.
Mm-hmm. Okay. Now the last question that I'd like to put out here is that I noticed that you're trading quite a lot of pairs. So
Mm-hmm.
how do you keep the track of which pair to enter, on what to trade?
So what I did was I set up on my chart, and I'm giving information here away. Um but I will give it away here. So basically what I did here, and this is how I when I get into the office, I break down all of my stuff, is I've organized all of my USDs together, my NZDs together, my pounds together, my euros together, CADs, Swiss, everything, Aussies, everything like that. And basically, I will go through all of them one
Mm-hmm.
at a time, and I will figure out which one is moving the most. So once I find out, okay, NZD JPY is, or let's just say, okay, I have some type of setup, let's say on NZD JPY. What I'm going to do now is figure out, is JPY the one that's moving the market, or is NZD the one moving the market? So I'll go through all of my NZD pairs, and we could see here, NZD's going down, NZD's going down, making a pullback, and now we're on pound. So we know that NZD currently has a form of bearish sentiment. It's not fully bearish, but it is making its way. And then you could see here, though, on Swiss is a little bit stronger. So what I would like to do here is go through every single one of my pairs and figure out which one is the weakest, or how could I intertwine that with NZD so I have the most volatility in that move. So if that makes sense at all, going through NZD, let's find the one that has the most volume. Which one's moving the most? So NZD CAD or NZD USD. So what I would do from this point, let's just say that we were going to trade on a bearish, we're looking bearish. We're going to trade NZD USD. Next, what I would do is I'd go through my USD pairs. So USD currently is sustaining here, while we see here NZD is bearish. So USD is the front pair on this side. So we know it's bullish in this sequence. So we're not going to trade USD JAPY. USD is a little bullish here, and USD is extremely bullish here. So now we know NZD is not going to be something that we're going to be messing around with on the USD side of it. But now what we can do, we know it is still bearish on NZD. We can go through all of our JAPY pairs.
Mm-hmm.
So we have JAPY. JAPY's going up. We don't want that. Swiss JAPY. We just got our bearish engulf right here. So we know NZD JPY. Let's go look for NZD JPY. So right here, you could look and you could say, okay, look, we have a double top right here. That's on the 15-minute time frame. Let's go to the daily. We are pumping up. We are at that top wick right here. So my anticipation would be I would like to come in, get a retest of this wick up here, and then look for short positions. Obviously, this is counter trend trading, but that is how basically, and this goes way deeper than what I've just showed you. I basically just showed you strength and weakness in the market. But basically, that is how I am identifying. So once I would do this, say it was 2 a.m. and I'm in my office right now, what I would do right now is I would strictly go and I would set an alert at 87, 347. And as soon as that alert goes off, I would go through all of my JPY pairs, all of my New Zealand pairs, and I would figure out, okay, now which one is intertwining the most. And you'll find a lot of times that, okay, actually, it turns out JPY is extremely strong. It is extremely bearish, but NZD is not the best pair with it. There's something else that's moving even stronger, like let's say GJ for sake. GJ is giving you a better bearish setup. So you can go through all of this. So that's what I do. I get into the office, I set up all my alerts, and when all of my alerts are set up, then boom, I bang them out.
Wow. Okay. All right. And finally, we're here in your account matrix. Now, I believe this is your latest FTMO account, so we can see a pretty steady growth of to about $17,000. So yeah, seems that the past month has been going quite well for you.
Yeah, for sure. What did I start? I started this the 9th to the 23rd. So yeah, this was in 2 weeks. And basically, the simplistic reality of this is, as you guys can see, my max daily loss was $1,500. Oh, didn't mean for him to pop up. And so basically what I want to go through with everybody, because this is the biggest issue that I find every single trader going through, and that is why FTMO helps this so much. It's basically FTMO creates these rules for you. You're not allowed to lose X% amount in a day. You can't lose more than 10K in a day. Your max loss is 20K. So this is completely depleting. So if you were trading with your own money, these rules that you create are nothing more than you journaling on with your pen and paper of, okay, if I reach this level, if I lose this much money in a day, I can't trade anymore. How many times have we all done that? And then all of a sudden we've gotten to that point and it's like, nah, I'm going back in. I'm going back in. Well, here it's simplistic enough to say you can't do that. And if you do that, you're completely taking yourself out of the game, and you'd have to be a moron to do so. So this keeps you in a very, very strict discipline aspect. So I wanted to talk about that and touch base on that, that the rules that FTMO is providing for everybody are phenomenal. They keep everybody in a structure, and that's what you need. This is such an entrepreneurship business, and it needs to be managed so coordinated. You have to manage everything step by step by step. And if you have already a company that's willing to fund you, on top of funding you, they're giving you rules and coordinates to respect, and the rules are very, very respectable. I mean, don't lose more than 10K in a day. Come on, guys. Let's be logical here. Let's not lose more than 10K in a day. But if you're trading with your own money opposed to that, and you're down 10K, you want that 10K back, so you're going to chase it. So this gives you that, okay, right now I'm down. Say I was down with FTMO right now, $8,500. I would immediately tell myself, I want to trade more, but I can't right now. It's best to take the day off anyways. Now I'm forced to taking the day off. So it backs you off completely. And then you are obviously reset the next day, and you have a fresh mind, clear head, get back into the market. So I love that the rules that they give you in that aspect, it definitely keeps you very coordinated. But when it comes to this, and this is a huge thing for me, risk rewards, you have a 77 win rate, percent win rate right now. Risk reward is complete BS. Do not ever pay attention to your risk to reward. My average risk reward right here is a 2.82. I couldn't even have told you that. And I don't pay attention to that. You need to take your money, guys, out of the market. This market, any market, owes you absolutely nothing. So when you're setting up that risk to reward tool on your chart, going back here, and you're worried about taking a short position, and you set up your tools, and you've got stops here, and you want to take it all the way to this low or whatever, and you want at least a 1 to 2 right there, immediately you're setting up psychologically that you want that 2%, and you know that that 2% is going to be, depending on, say you're trading on a 100K account, you want that 2 grand. You psychologically, you're already setting yourself up for a form of failure. So you don't even care about that aspect when you're trading with the funds. Right now, this is a 200K account. Fifth average profit is $1,300. That means my average profit, my average close position is less than 1% per trade. I don't even care about that. You strictly want to take your money out of the market when it's given to you. So that, when it comes to that, it is very, very, very important to understand as traders. People, you don't need to go for 1 to 10 risk rewards. You don't need to go for whatever the case may be. You need to strictly just take profit when it's on the table. And going back to that is risk. You always want to stick to a risk. My previous interview I had with FTMO, I was younger. I was chasing more money, I guess you could say, in a sense, or it was more of a, at the point in time, I don't remember my exact thought process, but it was working for me. It was working for me. But the rule of thumb is risk 1% per trade. The most you will ever find me trading or risking is 1.5%. And I risk on every single trade 1%. Again, guys, I can't give you too much information because I am releasing my own brand, about how I actually get into positions and how I run everything like that. But the rule of thumb, guys, don't risk any more than 1.5% per trade. That's my key rule of thumb. That's $3 grand for me. And basically, yeah, I don't want to dive too much deeper into that aspect because I can't give much more information than I've already given. But when it comes to the metrics, this is a great thing for you to understand, because now look at this. Me looking at this right now, I already know that I average less than 1% per win, but I win 77 or 78% of the time. So as long as I'm winning that many times, it doesn't matter what my risk reward is. None of that even matters. So coming down to my trades, this is something obviously we all have on our MetaTraders. We don't have to necessarily look at It's not crucial. It's a great indicator that FTMO provides this for us. But what we do want to look at is this down here. We want to figure out what the best times that we're trading. Um, so obviously here, and we want to figure out, are we better at buying? Are we better at selling? And we want to maintain that frequency, maintain that consistency. And then we want to figure out what pairs do we trade the best. And obviously gold for me, this is my best pair. I've been trading a ton of gold. I lost on Swiss JPY. That was my biggest loss, the 1800 loss. So again, guys, using this gives you a great indicator. I mean, honestly, I only have one loss. Honestly, I went through a pretty good run in the past few weeks, but this gives you a great idea of when the volume, obviously, I mean, it's a complete blueprint setup for you guys. You're better at longs than you are at shorts. Obviously, you're still winning on shorts, so don't take that out of the equation, but you're better at longs. Look, I'm 12,000, 13,000 up on longs. I'm up 4,400 on shorts. I know the open hour, 10 a.m. right here. This is where the majority of my money is made. Again, guys, I have a crazy strategy for that. I'm not giving it out right now, but it is something that is extremely effective. And here you go. You can see right here. What is that? 1,600 for me. That's Asian session. That's right when Asian opens.
Mm-hmm.
So
As mentioned.
I don't do good during Asian session. That's where the majority of, that's where my losses are during Asian session. And I'm pretty sure I scaled myself out of this position. I'm pretty sure this was my only loss, actually. No, it wasn't. I had a couple other stops to break even losses. This was my only loss. But this gives you a great metrics, great spectrum of basically what times to trade, where the most volume is going to be, what's your best currency pair that you're trading. This gives you confidence to know, all right, I'm trading gold. This is currently, I'm hot on gold, so let's stick to it. I already see a setup. I can trust that with my intuition, with my fundamentals, with what the DXY is telling me, anything along those lines. And then right here going into this, figuring out what works best for me. What is currently, as you can see, 10 a.m. That's New York session. That's New York to the end of London. London ends at 10 a.m. That's the overlay. So that's when London gets out. Here's another. That's noon for me. New York session. I do okay during London session, but this is grind hours for me. This is really when I'm working and doing self-development, figuring out my next steps in life. And then we have Asian session. That's when I go to the office way too early because I'm pissed off or something during the day and I just want to work on something. And then the next thing you know, you find yourself in a trade and then you're even more pissed off. So yeah, basically that's how I break down these metrics. They have worked for me very well. I do follow them because I love this aspect. This is the main thing that I follow, honestly, and volume. I like to know when the best times for me to trade. I'm sorry, not volume, open time hour. And I love to know that, and I love to know my symbol because when I know that I trade a symbol very, very well, then I know that I have confidence in that symbol when the next setup occurs to take the trade.
Okay, well, there's one more topic we haven't really touched on much, and that is the volumes. How do you calculate, the volume? I see that you have some pretty specific volumes. Some traders are going for like, 1, 2, 3 lots. Really not going into very specific sizes, so that you have like here we can see a lot size of 3.43,
Yep.
10.7. So how do you calculate that?
So again, that's me giving out one of my kind of, not my ace card, but it kind of one of my very I guess you could say powerful strategies in the market. Again, guys, I've always said you want to risk 1 to 1.5%. So if you could take upon what I'm saying and kind of put some salt on it, and figure out for yourself, if I'm risking 1 to 1.5% per trade, how am I doing that? And what aspect am I entering trades basically in drawdown, or am I entering them in profit? And how am I equivalating these lot sizes to my entries? That's basically all that I want to touch up upon that aspect because I don't want to give too much of the sauce away. But again, remember, it's the 1% to 1.5%. Um, and basically how and when I'm entering the trade. So you're going to see all of these numbers, the 6.06, the 1.95, these all coordinate to a specific variable. They all coordinate to a specific number. And that's me giving up information. If you could use your brain and kind of dive a little bit deeper, get on a chart and kind of play around, I think you'd be able to figure out what I'm kind of trying to say to you.
Yeah,
If you got
I guess it's not too hard. All right. Okay, and here we are in the final part of our interview, and we're gonna talk a little bit more about your plans and in your future. So you've been trading with FTMO for almost 2 years now. So
Right.
what are your plans for the future? Do you plan to stick with proprietary trading, or do you maybe plan to start your own fund? You spoke a
So,
bit about real estate as well, so I think
yeah.
there's a lot of to unpack there.
Yes. So I most definitely in the short term. So my next 5 year plan, absolutely, I will always stick with FTMO. FTMO has always treated me with more than extra respect when it comes to a business. But outside of that, it's the actual aspect of the liquidity and how much money you can make through FTMO. So when you have somebody that's willing to give you for $1,200, like I said earlier, 200 grand to $2,400 to 400 grand, which I'm currently at. It's very hard to walk away from something like that. It would be stupid in a sense. So right now, going forward, my plans are obviously I am also a sports handicapper. I also do sports betting. I do forex trading, commodity trading, crypto trading. Now I'm getting ready for the crypto market. I allocated a bunch of funds to reinvest into the crypto market. I will be getting into that. But right now, I am actually launching a brand for trading specifically. My brand is SSR. That'll be launched in 2 weeks. I will be teaching everybody the entire scope of top-down analysis, technical analysis, everything along those lines. And then going past, obviously, everything in the course, all of my knowledge will be put in from top to bottom. Everything expunged, books, everything's you name it. But going further into my life, right now I'm extremely heavily interested, and I always have been actually, and trading brought me to this was I love health. I love physical fitness. I love Muay Thai. I love juicing. Any of my close friends watching this are going to start laughing immediately, because I am gigantic with juicing. I love the whole health aspect of ingredients, vitamins, plant-based. I'm not vegan, but I love that entire environment in itself. So I am going to go. I am actually opening up right now my own business where it's IV drip hydration, juice bar, um, and basically it's a whole oral swabs, blood testing, genetic testing, all different things to help people, athletes in particular, professional athletes, to basically figure out where their blood levels are, basically giving them high hydration drops. There's hangover cures for people who drink. There's all different types of things. So I'm very into the wellness center. So
Mm-hmm.
that is something that is my next venture that I'm currently at right now. So I am at that point where I will be opening up my own business in that aspect. Again, remember, it's liquidity, business, and then real estate. So right now I am at the business aspect. I have a couple other business ventures that I will be opening up. I'm actually launching my own sports betting course slash sports betting data software in 2 months. So that is another aspect of liquidity that I will be using, and it's also a business. So obviously I have the SSR company coming out, which is my brand. I have a partner as well who trades with you guys. So we have that coming out in 2 weeks, and then in 2 months to a month and a half, I'll have my sports betting course coming out. And then from that point, I am currently on the sidelines working on my franchise that I've bought into, that I am going to be operating and running. So that is then the third step. And then step 4 is real estate. I want to get into real estate immediately. The problem is obviously inflation is insane and nobody really can make these projections. And it is more of a risk factor, especially for somebody like myself who makes a lot of his money off of risk, off of pumps off of daily cash flow, not knowing that I'm going to get a paycheck at the end of the week. So it's definitely the last venture on my aspect is the real estate portion. But if I could find something, because my eyes are open, I am looking right now all over. If something does approach me at a respectable price level, that is where I will start to jump in, and I'll be doing simply renovation properties. Here's another tip for traders. God, I'm giving out a lot of information. Don't do if you're getting into real estate, don't get into house flipping. Get into renovation properties, because when you're doing house flipping, it's a much riskier load. When you're doing renovation, basically what you're doing is you're stacking asset on asset on asset on asset. And what we want to do with our lives is grow. We want to keep building. We don't want to keep flipping the dice, bringing money in, dishing it back out, pulling back in, dishing back out. We want to continuously be doing this and building assets and buying into things that we can eventually sell in an aspect if we needed to sell, or strictly renting out. So I am going to be getting into renovation properties. I will be doing the three. I have a 3-month strategy where you can get a loan for 20K and just constantly every 3 months buy another house. So I will be doing that with multifamily unit homes. I'm not getting any deeper into that, but anything. But anyways, that is currently my 4 to 5 year plan. I would say is SSR, which is my main focus by far, which is trading, because I've been doing this for so long now. I'm so much more knowledgeable in it. I know not everything there is to know about this market, but when you combine my partner, Nick, who is also, he's my SSR brand partner. He's also a trader for you guys. When it comes to us putting our minds together, we have over 11 years, 12 years into the market experience together. So we put all of that stuff into a course together. So that's our main focus right now. And then obviously I have my sports bet course coming out. Then obviously the business with the franchising, opening my own store with that aspect, and then going into real estate. And that's my next 5 year plan. Hopefully at that point in time in life. And then obviously everybody's got to be watching the cryptos, stay on sidelines for cryptos, get ready, buy in. I'm not giving out my crypto, but there's a few cryptos that will also be in SSR. I'm going to be giving out tons of cryptos in SSR, but and that's the brand, obviously, if I haven't said it 100 times. Um, and in that aspect, I have a bunch of funds allocated to that. But within my next 5 year plan, that is exactly my approach and what I am going for right now. And I hope at 30 years old, right now I'm 26, I will be off to a whole new clean slate of all different new varieties. I will always be a Forex trader. I will always be a trader, and I will always be a sports bettor. I will always be into health and wellness. I'm just so curious and excited to see where all of these things that I had manifested 6 years ago, 5 years ago, while I was doing this, now can actually take me. Once I get to those levels and accomplish those goals, what will follow is next, is the excitement.
Yeah, so I can see you are really in the process of what you described before, right? You first get the liquidity, and then you
Mm-hmm.
invest it, or you put the money into what you're passionate about, and what
Exactly.
you really enjoy.
Yes,
All
exactly.
right.
Build your life around it.
Okay. Well, Griffin, thank you so much for being here. It was a pleasure to have you here
Thank
on the
you.
interview for the second time. And yeah, if there are any last words, anything that you want to just shout out there, now's the moment.
Um, I mean, yeah, sure. I mean, just so everybody knows, again, I've said it 100 times. I do have a brand coming out. It is SSR. Our domain is the SSR.club. So just look for us. Follow me on Instagram if you can. My name is Griffin Murphy. You can find my page, G Baby. So I will be, it's G_baby. That'll pop up. Follow me on Instagram. I will be posting tons of information, tons of updates, cryptos, sports betting, teaching people anything along those lines. And yeah, basically just everybody as a trader, anybody who's going through a tough time, hard times, just keep waking up in the morning, keep showing up every single day, whether win or lose, whether you have a penny in your bank account, whether you're loaded, it doesn't matter. If you show up every single day and you find real, true desire and passion for this thing, the universe and God will make it happen for you. And that's the realist, simplistic reality of it is the universe will make it happen for you if you want it bad enough and you chase it hard enough and fight for it. So again, guys, we have the company coming out. Follow me, stay in touch with me. If anybody has any questions, please DM me. I'm more than open to talking to anybody about anything at any time. I'm always on my phone. Instagram's always dinging, cell phone, whatever the case may be. Always feel free to reach out. I love giving out knowledge when it comes to my passions. And obviously, this is my number one passion. I've been at it every day for 7 years. So, yeah, guys, again, stick to your risk. Always risk between 1 to 1.5%, 1.5% max. Stick to it, marry it, love it. When you lose, don't beat yourself up. Remember that there's always going to be another day where you're laying at the beach, smiling, looking back, can't even believing that you were at one point in the situation you were in to where you currently stand. This market can do that for you. And again, guys, I just want to thank everybody for their time. I want to thank FTMO for the opportunity. FTMO, truly, you have changed my life in so many aspects, so many ranges. Right now, I'd probably still be selling windows if it wasn't for you guys. So again, I am appreciative of this opportunity to talk with you guys, give out some valuable information, and again, extend my branch or my brand, and hopefully bring in a bunch of people and create a huge team and help change everybody's lives just like FTMO changed mine.
And that's FTMO.